Happy Friday, traders. It is 8 a.m. Chicago time on the 24th of July, 2015. It's been an interesting week. Thanks for joining me if you're still here. Um, Derivatives trading involves substantial risk of loss. It is not suitable for all investors. Past performance is not indicative of future results. Not much on the overnight news. Yesterday's news as well. After the market, Asian markets closed lower. Gold is lower. Oil is higher. U.S. is higher versus the pound, higher versus the yen, higher versus the euro, and is the Canadian dollar is weaker against I think all 11-year weakness now against the U.S. dollar. Greece negotiators from the EU, ESM, and ECB will start bailout talks today. Visa Q2 EPS beat at 69 cents versus 58 expected. It's quite a beat. And revenues beat 3.52 billion versus 3.36 billion. Visa was up 5% after hours. Again, we're in the middle of the earnings season. Amazon, the third largest stock in the Nasdaq. EPS came in at 19 cents versus 14 cents. This is a big one for Amazon. Revenues beat 23.2 billion versus 22.4 billion expected. Amazon was up 17% in the after hours market. Nice big rally there yesterday in the NQ on the close. Probably in anticipation of that move there. Today on the calendar, we're looking for at 8:45. We're looking Central, 8:45 Central, 9:45 Eastern. U.S. manufacturing PMI 53.6 at 9 o'clock Central, 10 Eastern. We're looking for new home sales of 548, and at noon we have the Baker Hughes rig count for oil. Other than that, looking ahead, not seeing much of anything else for today. Expecting it to be a fairly quiet afternoon today, a summer's afternoon. Let's switch gears now to see what the market has done and what was expected. Overall, yesterday, absolutely no. Oops. There was absolutely no play on Hypo 1 yesterday at all. The most probable plan based on the market structure in the auction did not work out at all. Hypo 1 yesterday was expected to be a slight push down, and then we were looking for it to find a base and head north, head up towards 2115. So yesterday we were looking for it to open somewhere in here, come down into the point of control, chop a little bit, then start moving and get on its way to 2115.50. Yesterday was expected to be a reversal day up. Did not work out at all. The second hypo worked out better. It did test lower, failed to make a higher high, and then it pushed down into the 2101 again, with the primary target being 93.75, secondary target being the 89 to 87 area. The market stopped at 91.50. It hit its primary target on the downside with the pullback. So a lot more weakness than expected. In fact, this impulsive move down yesterday when we had our S5 weekly webinar, we discussed where we were and the anticipated action. The webinar occurred right here. The anticipated action is that we would get a continuation lower before the likely correction up, and that's exactly what it did. Just did not anticipate this impulsive move down here. So that's where we are this morning with the strength that we saw in some of the earnings here. The market has popped up, but it's been selling a little bit in the overnight session coming into the open. So here it is. We have our nice strong close with the continuation higher. We go sideways for the night, for the evening, and then we finally break higher back up, and then this morning it just sold off. Overall, the European market, when we look, because this is trading in sympathy, the European market showed strength from the open and has sold off since. Again, still expecting the Euro stocks to test this 36.75 from below, but let's get back to the ES. This morning, the overnight profile shows a fair amount of consensus on price. It's fairly balanced, really. It's not as pretty as some of our other profiles, with a weak high as well as a weak low. But overall, the overnight inventory is slightly short. We are trading right against yesterday's point of control, right there, and that's looks like we're opening in this area here. So overall, overall, the expectation for today is that we're looking for it to be stuck here. The key element for today, this LVN right here. If the market stays below this LVN, we're carrying this LVN forward from the low of the prior day. So this area here is fairly important. It happens to be the overnight high. That's not a coincidence. This is our key resistance coming into the session. Man, I can't draw a straight line. So it's the overnight high. It's the LVN that cuts off the two distributions. Remember yesterday we were very, very balanced until we broke lower. We have two distributions, and then we have a balanced profile over here. So any movement into this is going to be very carefully watched, expecting a rejection at 2104 in the 2104 area, 2103.50. I'm looking for, if the market does push up, I'm looking for an initial rejection off of that, a lower high, and then I'm looking for 89 to be tested as a primary hypothesis for today. Secondary hypothesis, again, the 2103.50, 2104 area is still important. Secondary hypothesis is that the market moves lower, tests the overnight low again to take out this weak low. Overnight low is right there. And then I'm expecting it to fight and then start working its way through back up to 2104. If it breaches 2104, I would look for a pullback and a push back towards 2112.75. However, it is Friday. I'm not looking for any extended moves or anything big to happen today. It is a summer Friday, and it's just the ranges collapse, and so does the volume generally. So again, just like with every day, Fridays are we need to be especially sensitive to the fact that that losses carry over into the weekend and take a much higher emotional impact, because you have all weekend long to simmer over what happened and how you could have done it better, and so on and so forth. So today's a good day to just pick off your highest probability trades that you can identify, and to stick with those. A quick scan of the market, just like I was wrong with Hypo 1 yesterday, which happens fairly often, but it's just part of the process. Being wrong on Hypo 1 gives me a great opportunity on the other hypos that still exist. It's something that I welcome. Most of the time, the hypos do work out as expected, though. It makes it it's not as easy to get on, but when the market confirms, I have a much firmer grasp of what the auction is likely to do. Yesterday, the treasuries moved down, which was expected. I expected them to work down into the weak structure that was left behind from Tuesday. So I expected them to move down, bounce up, break through the LVN, chop, retest the LVN, move down to the next LVN, chop, break through, pull back, chop. And then over the next few days, I expected them to work themselves down into this naked point of control and this high volume node in this area. Just as I expected the ES to open lower, chop, 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 and move up to 2115. Didn't quite do that. Instead, it turned right back around, and money went into safety yesterday and out of risky assets like treasuries, like indices, stock indices. And so we saw this rally yesterday that created some pretty strong um, pretty strong action in the 10 years. The 10 years have been a pretty interesting trade. This thing's been moving around quite a bit, in fact, a little more clearly than the ES has. That's all I had for you for today. I want to remind you again to just watch your risk today. It's not a good day to stake more than is necessary for the weekend, coming into the weekend as far as risk. It's a good day to just relax, finalize your journaling for the week and figure out where you stand and so on, and to cut out early and start your weekend. I don't see any big earnings today or anything to stick around until the end, and I expect the trade to be fairly quiet. Have a great weekend. I'll be in Chicago again on Monday, back home, and I'll catch you on Monday morning. Take care.